Well, I'm not a big believer in tariffs. History has shown tariffs at some historical times to be very bad. That's what occurred for our great stock market crash that caused the depression. I think interest rates so much important that we need them to actually come lower. One in four workers in America now are using credit cards for day-to-day needs. If interest rates don't go lower there and keep going higher, they are going to even have less to go forward on. Interest rates are probably going to be more of an impact on the stock market.
It's my great pleasure to welcome back Peter Grandich, founder of Peter Grandich Co. We'll be talking about his outlook for markets, precious metals, commodities, and the social economic environment under a Trump presidency. Welcome back to the show, Peter. Good to see you as always. Thank you for joining.
Always a pleasure to be with you, David.
We spoke a couple months ago. We were talking about the potential great conflict after an election. We live in a society where, we were talking about how one side isn't going to accept the other side. I live up north, and I just want to get your sentiment on how things are there, over there. Are you still concerned about that, or have things kind of settled down on the volatility, social economic volatility front?
Well, I think the way I describe it is the person that lost would have accelerated us to the turmoil I expect. The gentleman who won has forestalled the inevitable to come. And there is a melt up going on. Part of it is due to the overenthusiasm of a second coming like belief that Trump brings. And then there's the part where in a week or so we enter a time frame that I have called the say no to bah humbug period, when people between our Thanksgiving and New Year do not want to hear, nor do they want anybody speaking of any ill wills, especially if it's regarding the markets. So that combination probably gives a little bit longer honeymoon to Trump's time frame than normal. But there's no question that the people, ever since that man came down that escalator in 2016 and first announced his political ambitions, there's been a side that doesn't just not like him, not just hate him, but they really wish really bad. And I don't think they may be they may be mentally wounded now because they're shocked that he's back again. But I suspect that they're not just going to get up, brush themselves off, and say, okay, we got to go do something else. I think they will dig in their heels deeper and become as aggressive, if not more, against his policies. The difference is Trump got a clear mandate here. You cannot deny, whatever side you're on, that the majority of Americans at this point wanted change, substantial change from the past 4 years, and that they believe this gentleman can lead towards it because he won the popular vote, the electoral vote, plus seen Republicans take control of the Senate and Congress. How long that lasts will be questionable. I'll tell you this, Dave, he doesn't have 4 years, he has 2 years. 2 years' time, we have another congressional vote, as we always do. There's always a bounce when it's been more one-sided the next time out. But there's also a set of Senate seats up, and there's far more Republican seats that are up for election. If he doesn't hit the ground running and get a lot of things going his way, those Republicans who would be facing reelection, if it's not all the way the market currently perceives, which is going to be all Trump, they may not be as supportive to him as many suspect that he's going to get. So it's an interesting time, but we do have a honeymoon period now for the next couple of months.
You recently switched your stance on precious metals. Why?
Well, I was buying physical bullion from 1300, and in 2021, I chose for myself to actually buy it for pure capital gains. I sold general equities just to own gold because I thought it would go up more than the stock and bond market. It did. We got very overbought. We probably got to one of the most overbought situations I've seen in decades in the physical metal price. And so my decision was that there was a correction coming. Did not take into an account that the Trump win would actually add to that correction. But nevertheless, it occurred. We've seen the bulk of the correction in my book. My downside was 2,500 or so, with an outside shot of 2,300 if it got real bad, but I don't think that's likely. And I just don't think there's a catalyst to turn it around and make it a V bottom. I don't think gold has much chance to get back to the previous highs of this year until we get into 2025.
Before we continue with the video, let me tell you about a growing threat and risk to your personal safety that you should be aware of. Over the last decade, politically motivated online threats have surged, especially around recent election cycles. With the conclusion of the 2024 presidential election, concerns around personal information exposure remain critical. Today, 3 in 4 voters fear political violence fueled by how easily personal information like phone numbers, home addresses, etc., can still be found online. That's where today's sponsor, Delete Me, comes in. Delete Me removes your personal information from hundreds of data broker websites, helping you stay safer online. Using Delete Me is simple. Submit your personal information for removal, and within 7 days, you'll receive a privacy report showing where your data was found and removed. Delete Me continues to monitor and remove your information throughout the year, keeping you protected long term. For 20% off all U.S. consumer plans, go to joindeleteme.com/DavidLynn and use the promo code DavidLynn at checkout, or scan the QR code on the screen to get started. Link also down below. Take control of your online privacy with Delete Me today. This is what happened in the last Trump presidency. My chart here doesn't go all the way back before May 2017, but the first half of the year for the last Trump presidency since inauguration, January 2017, saw gold bottoming out at around $1,200, and then it kind of just oscillated. And then we had this massive rally between July 2017 to September 2017. So this 2 month period saw gold go up 11%. Now, gold's gone up a lot more this year than 11%. And of course, in 2018, we had a gold decline. So gold was kind of volatile under the last Trump presidency. There were a lot of forces pushing it around. Now, this time we've got inflation, we've got the dollar going up because of the election. So what happened with the dollar is huge spike up after Trump won. So let's just talk about the dollar first. Dollar and gold have historically been inversely correlated during most periods. The dollar, will it be strong under this Trump administration? What do you think?
I think the dollar rally right now is more of the fact that interest rates on the long end have gone up despite the Fed cutting rates, while much
Yes.
of the rest of the world is seeing interest rates being cut in key currencies. I think that's more of a reason than the Trump win, but it is a combination of both of them. I would like to go back to what you said about the how gold traded. Gold has traded completely different in this latest bull run than what was existing back at his first. The main reason gold went up as it did almost 40% from bottom to top this year alone was the central bank buy-in and the coming brick meetings that many were still speculating we would learn about a gold-backed currency or something that would impact gold. Because that didn't occur, and I was in the belief it wasn't going to occur, I think they're still a year or two away from that. And the fact that the central bank buy-in has eased somewhat, not a lot, is one of the main culprits, hindsight being 2020, why we've had this correction in gold. And now the Trump win has added pressure on gold for the time being because it's being perceived things won't be as bad with Trump in the presidency if Harris was going to be in the presidency. But all those things being considered, I think we needed that correction in gold. I think the dollar, especially the chart, if you look at now, is really just rallied back to a level where it's been before. I don't think it's about to go on a new crusade to much higher prices. I certainly don't believe it's going to become a major deterrent to own gold in 2025.
The issue of tariffs and protectionism and trade wars with China, that's expected to escalate. Whether or not it actually will is yet to be determined. But let's assume that things get worse between China and the US on the trade front. What does that mean for market volatility? What does that mean for a safe haven such as gold?
Well, I'm not a big believer in tariffs. History has shown tariffs at some historical times to be very bad. That's what occurred for our great stock market crash that caused the depression. Uh, I think a lot of what Trump said, or a good part of it, was blustering. I don't think it's going to be as severe as many people think. But if it does, and we have a trade war, we could also see a currency war. Let's not lose sight of the biggest news of the day of me and you speaking, which got almost no coverage in the financial media.
Hmm.
Just went over $36 trillion in
Yes.
long-term debt. And what no one is speaking about, even all those that are treating Trump as the second coming, the bottom line is it's going to become more and more difficult to service this debt, especially as we continue to grow multi-trillion dollar yearly deficits. And there's nothing in Trump's plan. If you think about all the people he promised to cut and eliminate taxes on, where we're going to get the tax revenue to replace that is beyond me. I think that's still the number one biggest concern we have, and nothing in this presidency or anything that's being talked about in the future is going to do anything to challenge or slow down that ascent. And quite frankly, when the Congressional Budget Office says now we're going to be at 54 trillion in less than 10 years, when we start to get to 50 trillion and we only have a 5% interest rate on the interest, we're still going to have a yearly interest payment of $2.5 trillion dollars. We only took in $5 trillion dollars in our best year a couple of years ago in revenue. This country cannot run in any way that we're used to or accustomed to or want to, when almost half of its income will go to pay just interest. And that's still the elephant or the gorilla in the room, whatever you want to call it.
Well, this is why Trump wants to implement some sort of efficiency commission. He's heading up a new commission called the Department of Government Efficiency, acronym Doge, which is a play on words of the crypto meme coin is, Doge, the dog coin. But anyway, Vivek Ramaswamy and Elon Musk are going to head this division. Take a look at what Vivek said about government inefficiency on the Tucker Carlson show. I'm just going to play 30 seconds of this. Get your reaction here.
These two things go together, though. Because if you actually did take one of those agencies and say, hey, you have to show up to work 5 days a week, and actually you have to go to Topeka, Kansas or Cincinnati, Ohio instead, you'd actually have a good number of the people quit anyway, which avoids the severance costs. So I kind of like that method, as you could kind of get two in one right there, is thinning it down and moving it out. But yeah, move the agencies out. You should fire about 75% of the federal employee headcount. If not, immediately on day one, you could ease into that pretty quickly. Agencies that are redundant can be reorganized that shouldn't exist. Department of Education is a good example. Shut it down, send the money back. Workforce training can move to the Department of Labor, and loan collections can move to Treasury. There's just a mass opportunity for a mega reorganization and thereby downsizing of this bureaucracy. And it's a one-way ratchet, because it's not like if another president comes back, they can write that back into existence by fiat. They'd actually have to go through Congress to do it.
All right, I don't know if that's going to make an impact on the debt, but what about the deficit?
The easiest way I would describe it is that's easier said than done. That all sounds great, and the intentions could be truly, really there, but implementing it and then carrying it out and the impacts on what that happened and in the time frame that they had it. It sounds great. It's the same as, well, we got to kick out all these bad people. Yeah, that's easier said than done, but it's going to marshal a big force to have to even try to do that. And then when everybody talks and say, okay, there's all these government workers that really are twiddling their thumbs and not earning their keep and all. Well, that's great. Well, you make them unemployed. They're still Americans. They're still going to have to find income in a job market where there isn't a lot of work. So what do? They do like other people do. They call on other government services to help supplement and get them through. So this is all nice. It sounds great. It's excited people. It's theoretically possible, but the theoretically possible and actually getting it done are two different things. And until words turn into deeds, I wouldn't give it too much hope that it will reach the levels that people are already discounting it's going to get to.
What, in your opinion, needs to be reformed the most from the U.S. government?
Well, perhaps.
Swami listed a few things that could be done to make it more efficient. What's your opinion?
Yeah, well, yeah, that's a good thing. I think there should be a requirement for Congress to balance the budget. It should not be where you can just keep putting these. We haven't had a balanced budget since the Clinton era, and both parties have been in charge. So it's not one party's fault that we haven't done that at all. I think starting with a constitutional amendment that the budget must be balanced, that we cannot spend a dollar more than we take in would probably be the bigger thing than arguing about getting things more efficiently and effective. I think the second thing is, and this is where I do fall into the Trump camp, is it's not so much make America great again, but focus more on America again. That we need to start at home, just as people need to start in their own homes and start spending less than they take in. We need to focus on America's first become more efficient in what it does before we worry about what's happening around halfway around the world. And so I think those are two things that we could start with.
Let's go back to tariffs. You said you oppose tariffs. A lot of economists do. The last Trump presidency didn't see us go into a Great Depression. But I do have to bring this up again because the fear is that we could see a replication of the Smoot-Hawley tariff imposed, the Smoot-Hawley Tariff Act of 1930, which some economists say exacerbated the Great Depression. Back then, it raised tariffs on roughly 20,000 imported goods, mostly to protect U.S. farmers, and it made prices of food items and other things a lot more expensive. I wonder if the current economy, obviously, if things have changed over the last 100 years, but I wonder if the current kind of economy can withstand potentially higher prices on input costs if we do have a trade war and other countries retaliate by instituting their own tariffs.
Well, we don't. One thing that happened during the Trump administration that the Trump supporters don't like to talk about is that he increased the deficit tremendously and so borrowed money. Now, he did that on the basis when he did his tax cut, his argument was, and I take him for his face value that that's what it was, that it would grow the economy so much stronger that GDP would grow much more than 4%, and that would end up making the money more powerful, more people working, and eventually be able to reduce the deficit. And the reason we can't answer whether or not it did or not, because COVID hit. He never had a fair time to see if that would happen. I suspect that a lot of things that have been said for the election will be watered down by the time they actually get going. And remember this, even though they have control, their control isn't overwhelming in the houses. It'll just take a few people not to fully back it. We've already seen in the initial, some of the nominees that he's speaking about, that some Republican senators have come out banging a drum that they're not for those people. So I don't think there's 100% unification. Everything Trump wants is going to sail through Congress and the Senate. But right now, the markets are acting that that's the way it is. And that's where they maybe have some disappointment coming the new year.
What do you think of the Trump tax cuts? He wants to reduce the corporate tax rate from its current 21% to anywhere between 15 to 20%. The Tax Cuts and Jobs Act of 2017, he wants to reintroduce that, make some of these cuts permanent. Do you think that tax cuts from corporations and some wealthy individuals is going to eventually stimulate the economy to the extent that people may expect it to?
The problem is that the tax laws have been structured. You can say you're going to give a blanket across, but certain parties are able to get around those laws with maybe the smaller income person can't. I think I would make the tax code more effective and efficient than worrying about lowering it at this point in time. I do think that one of the concerns that we hopefully got away from with this administration coming in, when we had Biden just choosing to say certain student loans don't be paid, that arbitrarily, and that opened the door. Well, what would happen? We're going to stop there. We're going to go to some people having trouble paying their homes or their cars. But let's not forget these type of things on the student loans. The single largest asset on the U.S. books was student loans. So when we cut those people having to pay it back, we had to get those taxes from somewhere. So we're going to tax somebody else in order to make up for that. I think a more, I hate to use the word because it's tossed around every couple of decades, but something close to a flat tax, just based on three or four different income levels, and not have all these write-offs and all, where some people can make millions of dollars and pay less than some poor person, making 50 or $100,000 does percentage-wise pay so much more. Uh, but that is always tough because it always comes to these pork barrel type of deals that get done in order to keep propelling the deficits going forward. That's why the tax book has gone like from this to this size now. CPAs say that they're never going to lose their jobs because it becomes more complicated each year to do taxes than make it simpler.
Trump does want to upend the student loan debt forgiveness program that is currently underway. What do you think of that?
Well, I'm happy for it. I was troubled by it. I was troubled by it because I worked real hard to make enough to pay my kids' college. There are people I know whose kids worked hard and paid back their student loans. And the people who he was forgiving, they did not suffer usury. They didn't pay an exorbitantly higher price for their loan than others did. And they also got their education if they wanted it. You owe a debt, you pay it back. I mean, I think is 101. And it really, like I said earlier, it opened the Pandora's box. Where do you stop? Who else do you start forgiving and all? Listen, there will be a tremendous battle, more than people expect now, even though the other side has been definitely beaten up, wounded, and realistically, a lot of things they're going to realize that they tried to do in the last 4 years is unsustainable. You cannot take away that Trump received the mandate. How he manages that mandate and what he does is still questionable. But the market until the last day or two was being perceived that no matter what he does, everything was going to be nirvana. And history says you don't expect that. We've had a lot of other good people come in hoping to do good work, but for one reason or another stumbled and fumbled.
I want to play a few clips from Trump's Agenda 47. This was filmed before the election, but he did outline a lot of his election or campaign principles. This one is entitled Preventing World War III. And I do want to talk about geopolitical risks and tensions under a new Trump administration. Let's just take a listen to the first 30 seconds of this clip.
We have never been closer to World War III than we are today under Joe Biden. A global conflict between nuclear armed powers would mean death and destruction on a scale unmatched in human history. It would be nuclear Armageddon. Nothing is more important than avoiding that nightmare. We will avoid it, but we need new leadership. Every day this proxy battle in Ukraine continues, we risk global war. We must be absolutely clear that our objective is to immediately have a total cessation of hostilities. All shooting has to stop. This is the central issue. We need peace without delay. In addition, there must also be a complete commitment to dismantling the entire globalist neocon establishment that is perpetually dragging us into endless wars, pretending to fight for freedom and democracy abroad, while they turn us into a third world country and a third world dictatorship right here at home. The State Department, the defense bureaucracy, the intelligence services, and all of the rest need to be completely overhauled and reconstituted to fire the deep staters and put America first.
So there's a lot to unpack there. Neocon deep staters need to be fired. There's going to be an overhaul. He wants to end all the wars. He said a lot of things in the last minute. I just want to ask you how you think the world order is going to change if he were to follow through on everything he just said.
Well, I happen to agree with mostly what he said there. So that's the first thing. I don't think that group that he spoke of, which I believe exists, will take too kindly to that. And they have a lot of cards to play to kind of hopefully sabotage or dilute it. But I agree with him. We probably were on a real cusp of so much nuclear, openly talking. Russia was talking whether or not they were serious about it, using nuclear weapons. We have a person that's really a wild card because he's a wild man in North Korea that has more and more nuclear weapons. People don't realize how many more nuclear weapons China has built. And David, how many you really need to end the world? You don't need thousands. You don't need hundreds. but just take a couple and the world as we know it would end. So in that regard, I agree with him. I've also been a big believer of his about the NATO situation. America has always had to fund so much more of the responsibility and be in the so-called world top. But he is correct. There is the arms and Washington and the money spent on military and so much wasted spending. How many great projects we built of planes where they spent $5 billion to develop a certain type of plane, only it doesn't fly. It's been stuck now and they never been able to fix it. Those type of things, that's where I think efficiencies. But remember, there are a lot of people that made a lot of money for this, and they're not going to take his challenge lying down. So he's up for the battle. There's no question. It's not just smoke from him, but it's easier said than done.
Well, what's going to happen if, let's say, other, let's say if America contributes less to NATO, and then the other nations, the other partners have to contribute a little bit more? Is that going to be more or less stable for allied defense?
Well, I would love to see it happen. They've gotten away with that. He made a very good argument a couple of years before the Ukrainian war started when he stood in front of the NATO Secretary General then and says, we're paying extra to defend NATO, and you're running gas lines with Russia, who you're supposed to be, we're spending money to defend against. And so one of the things that I think it isn't talked about, I don't know of others speaking about it. There probably is, but I've spoken about it for the last 3 to 6 months. And I think the European Union, as we knew it, or certainly how it was formed, is over. It is going to be more challenging to be a member in the EU. We've watched Germany in my lifetime on Wall Street go from the engine that could to the engine that blew up. And so I think Europe itself, Western Europe, has a lot of issues. And quite frankly, it's time for them to spend more of their own money defending their main interest than we spend in it. I'll give you an example, Dave. I gave a talk earlier today. I don't know why, and I'm not a military expert, but I can't understand why we have military bases in Syria. We have 4 different factions, 4 different groups attacking. We have Russian soldiers right next to U.S. soldiers and all. I do think he presents an overall argument of we not being all over the place. And let's face facts, our military, anybody that studied it knows it's not at the same strength that it was 20 or 30 years ago, while our proponents, particularly China, has grown stronger and stronger. So all in all, from your original question with him is, he's right. We did get close at the nuclear war. We need to definitely somehow find a way to step back from that. And one of the first things he's doing, and look what our current Secretary of State announced yesterday, that they're going to do everything they can to get as much money into Ukraine before January 20th. And January 21st, he's turning off the spigot. So there will be a major change. That'll be, I think, the biggest first change. I think Trump will clearly seek to end and certainly will seek to stop the U.S. sending money to Ukraine.
How do you think markets will react to this major change?
I don't think that change will have as much as impact. I think here's the single biggest thing that if I was a bull in the stock market that I'd be watching, and that is the long-term interest rates here. We've had a Fed now make 2 major cuts, and yet the 10-year Treasury bond has almost rallied, has declined almost 4 percentage point, and is getting to a point now where much above 4.5% could really kick the bond vigilantes into high gear. Now we're watching some very, very smart men, certainly 2 men that I would give my money to and not manage my own, Stanley Druckenmiller and Paul Tudor Jones, not only get short the bond market on the long end, but really talk about a potential credit crisis. I think interest rates, so much important that we need them to actually come lower. So many more people, the housing market is being really hurt by it. Talk to anybody in the automobile business. It's much more difficult to sell cars these days. Rates have gone up. 50% of all workers in the United States, the bottom 50%, 50% of them are 1 in 4 workers in America now are using credit cards for day-to-day needs. If interest rates don't go lower there and keep going higher, they are going to even have less to go forward on. So interest rates are probably going to be more of an impact on the stock market. And for those that still don't depend on computers and algorithms and go the old-fashioned way like for old school people like me, bonds for the first time in 22 years based on a bonds versus equity valuation are more attractive now than stocks for gains. And so there are headwinds in the stock market, even though since the night of the election, people think it's clear sailing, but there are serious headwinds still there for the stock market.
On the note of the US 10-year, yeah, huge rallies in the yield since the beginning of September, basically. And the bond market has been obviously, in decline because of that. So, what are you suggesting, Peter? Are we gonna is this going to continue? I mean, what is this price? First of all, before we get your outlook on the yield, what is this rise pricing in? The 10-year break-even inflation rate has also been going up. Is it signaling higher inflation? Is it signaling higher economic growth? As you pointed out, it's kind of strange that the Fed funds rate is declining. In fact, in most of history, it doesn't happen right away after a Fed cut that the long end of the curve goes up this much.
It's all and then some what you said. So first, inflation didn't get as low as the Fed was talking just a few months ago.
Yeah.
Second, the economy didn't weaken as much as some of us thought it would, or at least what it appears to be. The third is that from some key people that I follow, that they feel that Trump will do nothing to end the dramatic rise in yearly deficits, and therefore it's going to become harder to fund our debt as certain previous funders, China, Russia, and all, are selling on average our debt, not buying anymore. Americans now are more of America is financing its own debt than any other time in recent times. So all those things are playing into that, and you have to get suspicious now that we now just had a Fed chairman just say yesterday that, well, you know what, maybe we don't have to lower interest rates as much as we thought we had to. Maybe the economy is not as weak as some people perceived and all. And therefore, the hope that lower interest rates was going to stimulate a lot of things may not occur. But again, I'm going to point out to you, between basically now and year end, most people enter the Christmas cheer type of view and will not be too concerned as much as they would be at other times. But if we enter the new year and we're much above 4.5% on the 10-year, then we could start to see a problem with the bond market that could clearly impact next year's performance in the stock market.
Are you saying yields are going to trend downward here?
No, I think yields are actually going to go higher. I think we're going to get back to, I think we'll be somewhere in the first or second quarter, we'll be back to 5%. And of course, much of a break above 5% could really change things. But I do think, I'll put you to this way, I think we'll be at 5% before we'll be under 4% on the 10-year.
Yeah, I remember a couple of years ago, people were saying, can the government afford 5% on the Fed funds rate, not the 10-year? But the Fed funds rate is coming down with debt at $36 trillion. Can the government afford 5% 10-year?
Well, I'll just say again, as much as that deficit is now running multi-trillion-dollar deficits, most were at 36, it still doesn't take into account the needs to service unfunded liabilities for Medicare, Medicaid, and Social Security. And we're all learning, those of us who are getting any of that now, how much more Medicare is charging and how much less Social Security is being left to pay people in the future. And again, there isn't anyone I know of that maybe on occasion, or Ron Paul says something, there's nothing to talk about these unfunded liabilities and the cost. And even if you get the efficiencies in the government that everybody's talking about, and even if you save hundreds of billions of dollars or possibly $1 trillion or more, we're talking about unfunded liabilities that some say is in 100 trillion. And again, we're not doing anything to slow down that growth in terms of the debt increasing. And each time it goes higher, the bigger challenge it's going to be to stop it.
By the way, Trump did say Republicans should not cut any funding to Medicare.
Under no circumstances should Republicans vote to cut a single penny from Medicare or Social Security to help pay for Joe Biden's reckless spending spree, which is more reckless than anybody's ever done or had in the history of our country. Biden has blown out the federal budget, wasted trillions on left-wing lunacy and the ridiculous Green New Deal, which is a tremendous problem and embarrassment to us, and thrown open our treasury and our borders to migrants from all over the world.
All right, he did cover migrant issues on another video clip, but yeah, just in the note of Medicare and Social Security, that's not, according to what he said, it's not going to get cut. What does that mean for you?
The cost is still going higher. We're being charged more because we have to. And the longer you don't work on this, and the longer we just, more people are going to command it. And then the challenge comes from the people that are left supporting it, Dave. And I'm not saying you're in Canada, but people your age here in the States, they're going to be the ones to take the burden of those increases in order to keep funding these things without cutting them, as he said. And a lot of those people getting to the point where they're having trouble paying their rents or mortgages or putting food on the table. So again, these are all wonderful ideas and thoughts, but to be able to implement them and make them work, seeing is believing is the philosophy that I have to go at this point.
So finally, let's talk about planning for wealth protection. I know you work with retirees and some pensioners on retirement planning. Have you changed your outlook for them, or any advice for them, that group, following the election? In other words, are you more risk on? Are you less so? Any changes in strategy?
There are no major changes. The serious issues that existed before his win, I still believe are here and will be here even after he's done doing whatever he does. And again, it goes back to spending more than we take in. I have an overall philosophy. It's only 3 words that describes my planning style that I do, and that's less is more. Is to convince people through proper cash flow, not chasing hopefully higher net worth to solve your issues, to be more efficient and effective of what you have, than try to make more of what you have by risking putting what you have, at risk. And there's nothing there. The only positive I can say without a doubt is at least he gives us some sort of a chance at things. The Harris win, because none of us to this day, still to this moment, have any real idea what her actually plan was because she never presented one. But he is at least attempting some things. Please God that a lot of them work. But I think it's going to be a lot more challenging than what people assume right now in the markets.
Very good advice, recommendations, and I'm talking about life advice in general. I think that could be applied not just retirement planning, but just how you manage your personal finances in general. So anyway, where can we learn more from you?
So the single biggest place where I communicate now is through my X page. Then there is a YouTube channel, and then of course there's petergrandich.com, where it explains all what I do, including the alternative to traditional financial planning practice that we have here just for U.S. citizens.
Very good. Thank you very much, Peter. We'll put the links down below. Take a look and follow Peter there. Thank you. We'll speak again soon. Take care.
Thank you, David. God bless.
And thank you for watching. Don't forget to like and subscribe.